Hi friends, welcome to A to Z Learning channel. Today's video is going to be focusing on two upcoming IPO issues. The first one is RailTel and the other one is Nureca. This video is basically to help you understand all that you need to understand about these two companies so that you can make an informed choice to apply or avoid these IPOs. We have set out all the relevant information in this video, starting from company profile, the objective of the issue, their financial performance in the recent past, the key facts around the IPO in terms of the dates and subscription size, all that. And most importantly, in the final section, we will share with you our proprietary metrics that we apply on each company which is looking to raise money from the market. And that proprietary matrix will help you assess whether it's a good issue to consider applying or it's an issue which one must avoid. So it's going to be a very important video if you're looking to invest in any of these two IPOs. So without any further delay, let's start our video. As I said, we will cover all the relevant information that you need to know about these two IPO issues in a very user-friendly manner. So starting with, first of all, the company profile. So if I pick up the RailTel, and your screen has got all the detail, but if I pick up the RailTel first, let's understand what is RailTel. RailTel is a public sector undertaking. It is also categorized as one of those mini Ratna PSU companies in India, which means it's a small company, small PSU company, but it is doing really well. That's why it is classified, categorized as mini Ratna PSU company. What does it do? It is the one of the largest neutral telecom infrastructure providers in India, and it has got pan-India optic fiber network. What it does is basically along the railway track, it kind of connects all the railway station with their telecom needs, their internet needs, their fiber optic kind of needs. It has got the exclusive right of way along 67,000 kilometers corridor, which connects over 7,300 railway stations. So all your internet needs, the telecom needs at the station, whether it's a small vendor or the station office, any shop that's on the station, they use the internet, they use the network. It is all provided by RailTel there. Let's understand the financial performance of the RailTel. As the screen shows, if we look at the last 3 years, the company grew by pretty much 2% in terms of revenue and 1% in profitability between 2018 to 2019, so pretty much flat. But last year, last full year, which ended in March 20, so from 19 to 20, their revenue grew by 12%, profit grew by 4%. And if I look at this year, first half, which results are available, the revenue is on track in terms of giving a flat growth relative to last year, but profits seem to be down in the first half. But we all know coronavirus and no railway kind of traffic. Railway traffic is not at its peak yet, not at the level at which it used to be before coronavirus. So it has impacted its revenue and therefore its profitability is also low. But from a longer term perspective, the company is a solid financial company. It has got backing of Government of India. It has got exclusive market in which it kind of earns its revenue from. So there are limited risk in terms of RailTel as a company. On the other hand, let's understand Nureca. Nureca is a very new company. It was incorporated only in 2016. So it's only 4.5 year sort of old company. It's a healthcare and wellness product distributor. So they don't manufacture, they procure the products, healthcare and wellness product manufactured by others, but they distribute it. They have got their own digital website called drtrust.in through which they sell their product. and this is the first company to do so. But they also have got tie-up with other e-commerce partners to do the same. So their distribution network is strong. Their product portfolio is also well diversified, right from products in the area of chronic device, orthopedic, mother and child related kind of products, nutrition supplements related product, and other general lifestyle related product. They distribute pretty much everything in that portfolio. There are some risk factor that I have looked at in their red herring prospectus. The two, three things to highlight, which particularly are unique with this company. First of all, I noticed that their auditors have qualified their audit report by saying that they have found company on a regular basis delaying depositing their statutory dues. For example, the provident fund that they are supposed to deposit on behalf of their employees in a given time frame, the auditors have noticed that there has been frequent delays in depositing that, and that's always a kind of worrying sign when companies administration is not organized enough to be paying some of these statutory dues within the due date. The second thing that is alarming in this company is that their promoters have been issued search and seizure notice by income tax. And that's, again, sometime it can be shooting in the dark. But usually these days, when income tax department is going after, they usually suspect some wrongdoing. So I don't know, there is no kind of full report yet, but they were issued a search and seizure notice, and that's a risk that I see. And last unique thing to kind of highlight in terms of risk with this company is that historically they have seen years when their cash flow has been negative. Though it's a profitable company and it's continuously kind of delivering good profits, their profit margins are also very good. Most recent 6 month, if I look at, their profit margin are almost 30%, which is very, very good for a company which is just distributing. So distribution margins are usually low, but they are making good 30% margin there, in spite of being new, in spite of being their brand not yet known to the masses. It's a very good level of profitability, but their cash flow is negative, which is understandable also to some extent because company is new, so it's still investing in the growth in its platform, in building their kind of distribution network strongly. So it requires a lot of investment, and therefore their need for cash is quite high. But they have seen negative cash flow, and negative cash flow is always a kind of a negative mark in our views. So we wanted to share that with you as our viewers as you kind of make your decision of either investing or not in this company's IPO. When I look at the financial, as I said, it's a solid growth company. In 2018, they had only about 20 crore of revenue, but this year, the ongoing current financial year, in the first 6 months, they have had a revenue of 123 crore. So they have grown within 3 years 6 times in terms of revenue. Same is the story with the profit. Profits were about 3 crore back in 2018, but for this year, the 2020 21, they have within the first 6 months they have they have delivered a profitability after tax of about 36 crore. So you can see 12 times growth on the profitability as well. So it's a solid kind of highly growing business, and you can understand the nutrition supplement, lifestyle related kind of wellness product, and other healthcare products in the space of mother and child kind of care, orthopedic, chronic device. All those sort of things are well in demand. So you can see that the future of this particular industry and future of the business model that Nureca has got potential. This industry is going to grow, but how successful Nureca will be in the long run is something we don't have enough time. We have not seen Nureca for long enough period to kind of make a strong conviction with a call with a strong conviction. So that's all about in terms of company profile for both RailTel as well as Nureca. Now let's move to the second section. In this second section, we'll share with you the key IPO facts that you need to know. So starting with RailTel first. The objective of them coming into the market and raising money is that it's part of their government's disinvestment plan, where government is exiting from some of the 100% public sector undertaking by having retail participation, institutional participation. So it's part of the disinvestment strategy. There's nothing wrong with that. The issue will be opening on Tuesday, 16th, and it will remain open till Tuesday, Wednesday, Thursday, end of Thursday. Overall issue size is 819 crore. It's all offer for sale. There's no fresh issue. As we're saying, the government is exiting, selling some of their holding. The price band is 93 to 94 rupees, which looks attractive given the profitability level. Overall market lot size is 155 shares, and it will be listed on both BSE as well as NSE. Allotment will be finalized by 23rd of February for RailTel. If you're lucky one to kind of get the share allotted, then you will see those shares in your demat account on 24th, and listing date is 26th February. If we, on the other hand, look at the Nureca, what is the objective of Nureca? They are raising money to meet their working capital requirement. As I said, that they have seen a year when their cash flow was negative, so they need more cash so that they can meet their working capital requirement. So that's the main reason. Overall issue size is about 100 crore, and 75 crore is to meet their working capital, which is a good reason to be raising money for, and the rest is just for general corporate purposes. Issue will open on Monday, and it will remain open till Wednesday next week. And issue price is 396 to 400. Face value is 10. It has got a huge growth potential, and I think part of that is what they have reflected in their pricing as well. Again, nothing wrong with that. They want to kind of take advantage of the positive sentiments, momentum that is there for the IPOs in the market currently. So they want to raise as much money they can. Again, if I look at in terms of key dates, allotment will be finalized on 24th February. Shares will be in your demat account if you get allocation, 25th February, and the listing is also 26th February for this company. Hope all these key facts kind of make sense. Now let's move to the third and the final section. In this section, what we do is basically we help you assess what to do with these IPOs. We have got our proprietary assessment matrix, which looks at the 5 factors. First one is the history of the company and the purpose of the IPO. Second, we look at the promoter's background, reputation, and interest. Third, we look at what is the general market sentiments and the subscription level of recent IPOs. Fourth one, we look at companies' strength in the industry in which they are operating. And the final piece, we look at what is the IPO pricing and what the gray market story emerging for these companies. So we've applied these 5 assessment metrics on both RailTel as Nureca. And as you can see on your screen now, this is our assessment. So RailTel gets a big thumbs up from us. All the factors are very positive. So it's a complete green for us. Whether you look at any of the assessment metrics, they are all green across. So therefore, it looks a good investment opportunity, whether your objective is long run or short term, or you're looking at listing gain. Everything looks very, very positive in the case of RailTel. In fact, the gray market premium is also about 40%, little over 40% currently. So for 94 rupees, you could be looking at 30 to 40 rupees of premium on that on a listing date. But again, gray market premium can change. So we'll keep you kind of updated if something materially changes about RailTel. But as of now, looking at the fundamental, looking at the objective, looking at the overall market sentiment and their strength, it gets a big thumbs ups, RailTel. Nureca, on the other hand, has got few issues that we have noticed in terms of history of the company. For example, the company is only 4 year old, so we couldn't really validate enough about the company and have strong conviction. Promoter background and reputation looks amber to